Welcome to Talk Tickers, where we break down the earnings calls that are really moving the markets. Today, we're diving into LivaNova's third quarter results, and honestly, this one was a real head-scratcher.
So just look at this. On the one hand, the results were frankly awesome. They beat their adjusted earnings per share estimates by a whopping 22%. You'd think that would send the stock to the moon, right? Well, nope. The market's reaction was a nearly 6% drop in the stock price. And that is the central puzzle we need to solve today. You've got a great report, they raised their guidance, so what on earth happened? Okay, to figure this out, we're going to look at both sides of the story, starting with the bull case.
Now, if you listened to the earnings call, you'd understand why management was so upbeat. They painted a picture of really strong momentum and excellent execution across the board.
The headline number was absolutely the star of the show. Adjusted earnings per share hit $1.11. The consensus on Wall Street was only around 91 cents, so this was a massive beat. And it's up 23% from this time last year. I mean, these are the kinds of numbers investors usually love to see.
So where did all this power come from? Well, a huge piece of the puzzle was the Cardiopulmonary division. It grew by an incredible 18%. This was pretty much all driven by their new Essenz perfusion system, which is apparently a huge hit and getting them some really great pricing. And get this, it wasn't just a great quarter. Management showed a ton of confidence by raising their full-year guidance across the board. We're talking higher revenue, higher earnings, and higher free cash flow. This is that textbook beat and raise scenario. So far, the bull case looks just about perfect.
So we're back to that big question. If everything looked so good, why the sell-off? Well, this is where it gets tricky. It seems the market was less interested in the great Q3 results and more focused on what was lurking just around the corner. Let's dig into the bear case.
Here's the first red flag. While those adjusted numbers were fantastic, the official GAAP earnings told a very different story. Now remember, GAAP numbers are the ones without any special adjustments, and on that front, LivaNova actually missed estimates. In fact, their GAAP EPS was down almost 20% from last year. That kind of disconnect definitely raises eyebrows.
And then the analysts on the call started doing some quick math. They took that new full-year guidance and realized, wait a second. For them to hit those numbers, the fourth quarter would have to be surprisingly weak. Michael Pollack from Wolfe Research really hit the nail on the head, saying the guidance looked extremely conservative. That's when the tone of the call really started to shift.
So what the market heard wasn't the Q3 beat, but a collection of headwinds setting up for a really tough Q4. We're talking about a 10-cent per share hit from a planned investment, supply chain problems limiting their oxygenator production, and a really difficult comparison against a super strong quarter last year. All of a sudden, the narrative changed.
Okay, but to really get what's going on with LivaNova, you have to zoom out from just this one quarter. This whole episode fits into a much larger strategic story for the company. They are in the middle of a major pivot.
Their game plan is actually pretty straightforward. Step 1, stabilize their core businesses, cardiopulmonary and epilepsy, and turn them into a solid foundation. Step 2, use that foundation to generate a ton of cash. And then Step 3, the exciting part, plow that cash back into their pipeline, specifically into these potentially huge programs for obstructive sleep apnea and depression. And you know, this quarter really proved they're acing Steps 1 and 2.
And this is where that long-term vision gets really compelling. Just look at this catalyst map. They have an investor day coming up very soon, a big launch in China next year, but the real potential game changer is that U.S. launch of their sleep apnea device planned for 2027. They're targeting $200 to $400 million in revenue from that alone by 2030. That could totally reshape the company.
So where does all this leave us? You've got this battle between the murky short-term outlook and a really bright long-term potential. It's a tough one. So here's our take on what to expect for the next call.
We're predicting LivaNova is going to hit their Q4 numbers. I mean, they guided pretty conservatively, so they've set a low bar. But because of that, we don't see a big surprise beat coming. For that reason, we're rating the stock market perform. We think it's likely to just trade sideways until we get more clarity at their upcoming investor day.
Now, for the more aggressive traders out there is an interesting play. It's called a straddle. You're basically not picking a direction. You're just betting on a big move. You buy both a call and a put option. If the company's long-range plan at their investor day wows the street, the stock could rip higher and your call pays off. If they disappoint, it could tank and your put pays off. It's a pure volatility play for a very uncertain event.
This is not financial advice.